Good morning. I am Malik. If you are sitting in cash right now, I need you to listen very carefully. You are not just missing out. You are witnessing the vaporization of your purchasing power in real time. Yesterday, Monday, January 19th, the Pakistan Stock Exchange did not just rally, it melted up. Let's look at the official scoreboard from the closing bell. The KSE 100 index closed at 187,761. That is a single-day gain of 2,662 points. Percentage-wise, that is a 1.44% jump in one session. But the number that should keep you awake at night is the volume. 1.19 billion shares. Let me repeat that for the people in the back. 1.2 billion shares. This is not normal institutional accumulation. This is panic buying. We are seeing what economists call a crack-up boom. The market isn't buying stocks because they believe the economy is fixed. They are buying stocks because they are terrified of the currency. With the Trump administration's blockade on Venezuela and the Malacca Strait effectively closed, oil is trading at $115 a barrel. The smart money knows what comes next. The rupee heads to 350, so they are dumping cash and buying hard assets, oil, refineries, and gold. Today, in this extended briefing, we are going to dissect exactly where that 1.2 billion volume went and why the divergence between the winners and losers is the most dangerous signal on your screen. Let's start with the engine of this rally, the war trade. If you followed our strategy last week, you are sitting on massive gains. The market is aggressively repricing anything related to energy. First, the refineries. In a blockade economy, the refinery that actually holds crude inventory becomes king. Look at Attock Refinery, ATRL. It closed yesterday at 787.04. It hit an intraday high of 792. Just a few days ago, we were targeting 750. Now, 800 is a formality. Why is it flying? Because gross refining margins on diesel are exploding due to the shipping crisis. National Refinery, NRL, joined the party, closing at 444.27. Even Pakistan Refinery, PRL, saw huge activity, trading 37 million shares to close at 37.36. Second, the E&P giants. This is your currency hedge. These companies earn in dollars. Oil and Gas Development Company, OGDC. It closed at 328.98. The volume was significant, over 13 million shares. Foreign funds are buying OGDC because if the rupee crashes, OGDC's earnings per share automatically double. Pakistan Petroleum, PPL, closed at 264.75. And look at Mari Petroleum. It is trading at 734.90. Here is my read. The market is pricing in a super cycle for energy. If you own these stocks, do not sell yet. The geopolitical situation has not improved. The blockade is still there. My target for OGDC is 350 by Friday. My target for ATRL is 820. Trailing stops are your friend here. Let the winners run. Now, let's move to the banking sector. This is where the story gets complicated. Yesterday was a historic day for Mizan Bank, MEBL. It officially crossed the 500 rupee barrier. Closing price, 500.21. MCB Bank rallied to 428.13. United Bank, UBL, is knocking on the door of 500, closing at 494.78. Retail traders are cheering. They see this as a sign of strength. I see it as a trap. We are exactly 11 days away from February 1st. That is the date the Saudi stock exchange, Tadawul, opens to international retail investors. I believe this rally in banks is being engineered to provide exit liquidity. Big foreign funds need to sell millions of shares of MEBL and MCB to move their capital to Riyadh. They cannot sell if the price is dropping. They need a rally to sell into. Look at the Bank of Punjab, BOP. It was the volume leader yesterday. 103 million shares traded. It closed at 41.73. When you see 100 million shares churn in a mid-tier bank, that is distribution. That is shares moving from strong hands to weak hands. My strategy for banks: if you are holding Mizan or UBL, be very careful. Place a hard stop loss at 495 for Mizan. If it breaks back below 500, the distribution is confirmed. Do not be the bag holder when the Saudi exit flows really start next week. While the index flew, did you notice who stayed on the ground? This divergence is the most critical part of today's briefing. Technology. Systems Limited, SYS, closed at 160.25. It barely moved. The index was up 1.4% and Systems was flat. TRG Pakistan closed at 76.60. WorldCall Telecom, WTL, is stuck at 1.74 with 155 million shares traded. Why is tech dead? Because tech hates inflation. Inflation means the state bank cannot cut interest rates. It means rates stay at 22% or go higher. Tech companies run on borrowing and future growth. High rates kill them. Cements. Lucky Cement, LUCK, closed at 500.15. DG Consement, DGKC, closed at 233.12. They rallied slightly, but look at the fundamentals. The Malacca blockade means coal prices are rising. High coal prices destroy cement margins. The market is ignoring this for now, but the earnings report will be a disaster. My call? Use any strength in cements to sell. Rotate that capital into energy. What is on the radar for today, Tuesday, January 20th? We have 4 critical board meetings scheduled that could trigger volatility. 1. ATMG Life Assurance, ALIF. Meeting time 11 a.m. in Karachi. Agenda, matter other than financial results. Stock price, 43.64. Insurance companies are sitting on massive cash piles. Are they announcing a special dividend or a merger? Watch the volume at 10 a.m. 2. Service Global Footwear, SGF. Meeting time 3 p.m. in Lahore. Agenda, matter other than financial results. Stock price, 120.02. Exporters are winning on currency devaluation but losing on logistics. This meeting is high risk. 3. Globe Textile Mills. Meeting time 11 a.m. Agenda, second quarterly accounts. Expect weak numbers due to energy costs. Avoid. 4. First IBL Mudaraba. Meeting time 11 a.m. Agenda, first quarterly accounts. A warning on book closures. Do not forget the sugar trap. Habib Sugar, JDW Sugar, and Sindabadgars are currently in book closure. Your capital is frozen in these names until January 27th. Mere Pork Sugar is also in book closure until tomorrow, Jan 21st. Do not try to trade these symbols. There is no liquidity. So, here is your battle plan for Tuesday, Jan 20. The market state, we are overbought. The RSI is screaming. In a normal market, I would tell you to sell everything, but this is a panic buying event. Momentum can stay irrational longer than you can stay solvent. 1. The inflation portfolio. You must be heavy in energy. OGDC, target 340, PPL, ATRL, target 820. This is where the smart money is hiding from the inflation monster. 2. The danger zone. Do not short this market. I repeat, do not short. If the index breaks 188,000 today, we go to 190,000 by Thursday. Short sellers are being liquidated. Do not join them. 3. Cash management. If you made big profits on Monday, especially in banks like MEBL, take 20% off the table. Lock in that profit. Keep some powder dry. Volatility works both ways. We are riding a Tifer. It's dangerous, it's fast, and you cannot get off. Hold tight. I'm Malik. Good luck. Disclaimer. StockSense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.